another edition of BullHorn. I'm here with Phil Perlman from StockTwits. Welcome.
Good morning. Good morning.
Wanted to talk a little bit about financials. They seem to be a big driver of the economy, whether they're good or they're bad, whether you love them or you hate them. Right now, they're clearly sitting in the penalty box.
We saw a very interesting mark in the trend in April, mid-April, where the banks diverged from the broader market. The broader market kept going higher, and the banks started to break down. And StockTwits was all over that. They're watching price very closely, the members on our site, and they notice that they're getting weak. That's a huge warning sign. And it's an even bigger warning sign given that we just had a credit crisis a couple years back, and that the Fed saved the banks. And an Upside Traders piece this morning, which is a must-read on our blog network, he really pointed out that the Fed came in, did what they needed to do by flooding the banks with money. The banks did what they needed to do with sort of an arbitrage by borrowing for nothing from the Fed and then loaning to the Treasury, really. So it's sort of a Peter to pay Paul situation.
Yesterday, Jamie Dimon had some pretty harsh words out there, sort of slamming Bernanke and just federal regulation in general, saying everything is behind the curve and it's hurting banks. And we're seeing bank stocks, JP Morgan's down over the past month. Same thing with Goldman and Wells Fargo. Is there an end game in sight here? Or is it just another one of those we need to buckle in and brace in for a bumpy ride?
Well, the banks are getting hit. They're underperforming for the year significantly. I think the S&P 500's up a couple percent this year. The XLF, the bank ETF, is down 8%. You have Goldman down from 175 to in the 130s. You have Wells down. You have back down close to $10, $10.60, $10.70. It was at 16 this time last year, or a little bit later in the year.
Right.
The backdrop there is that we did just go through the credit crisis, and so there is this reflex action.
One area that does seem to be getting some kind of momentum are the REITs. They're faring really, really well this year, and a lot of that is because of the rents actually going high. So is that something that people in StockTwits are talking about? Is that something that they're seeing as a momentum play?
With interest rates so low, some of the REITs pay a nice dividend, and so I think that there is perceived safety in the sector. And with rents performing better than housing prices, you're going to have some relative strength there.
Another stock that I saw that was trending yesterday that was interesting, Soda, SODA. What's going on there?
Well, Soda's a story stock, has a very interesting product, very hot. There's a lot of shorts in the name. That makes it even more of an emotional play. Chart looks great. A ton of guys on the stream, on the StockTwits stream yesterday, crushing that trade. They were all over it 2 or 3 days ago. And it trades really well in a tough tape. This is an innovative product that people like. That is something very new. The bulls are intimating the buyout. I have no idea what's going on. I know it's in play. I know it acts well. That's the focus.